The company has grown manifold and has become a category creator as well as leader. If Mr. Ravi Modi is the man behind Manyavar, then Mrs. Shilpi Modi is the woman behind Manyavar. She has played a very significant role and has been the backbone throughout the successful journey of Manyavar over the years. The company provides a one-stop destination for every family celebration wear needs. The company offers products across value spectrum through its brand like Manyavar, Mohe, Mibaz, Tomev, and Manthan. Across all the brands, we follow one unified objective of delivering products which are aspirational yet value for money for all our customers. The company has evolved dynamically over the years. The glorious journey was started by Mr. Ravi Modi in 1999. The first exclusive brand outlet was opened in Bhubaneswar in 2008, and the first international store was opened in Dubai in 2011. In 2012, the company crossed 1,000 crores of EBO revenue. In 2015, women's wear brand Mohe was launched, and the company also crossed 500 crores of EBO revenue in 2016. 2017 was a strategic year for the company in which Mebaz brand was acquired, and marquee investors like Kedara had invested in the company. With exponential and dynamic growth over the years, the company grossed 1,000 crores of EBO revenue and 1 million square feet retail space in 2019. Now I would request Vedant to present the investment highlights. Vedant.
Thank you, Rahulji. Namaskar, everyone. Now we'll take you through the key investment highlights of Manyavar and Vedant Fashions, which makes it unique. We'll discuss about all of the strengths and details in the subsequent slides. The Indian wedding and celebration wear market is large and growing. The ethnic wear market size currently stands at about 1.8 lakh crores, wherein women contributes to 81%, men 10%, and kids 9%. The organized market in the men's segment is expected to grow at a CAGR of about 20 to 22% over the next 5 years. And the share of organized would increase from 20% now to 42% in the next 5 years as well. The sheer size and the pace at which organized is taking a pie from the unorganized segment itself speaks of the strength and the growth opportunity that we're standing at in our men's segment. Next, please. India is a land of festivals, and wedding is celebrated in a very glorious way in our country. Our demographics help us a lot in this way, with 1 crore weddings happening every year. We have approximately 3 to 5 days for each wedding in India, irrespective of one's religion, again giving us a good scope to sell multiple products to a single consumer. Then what helps us even more is people's increasing association towards the brands and celebration ethnic wear. Most importantly, their shift towards ready-made wear due to quick and enhanced product experience when compared to tailor-made. The overall size and the sheer pace of unorganized to organized and the Indian demographic in total is a huge scope as far as this industry size of ethnic wear is concerned for Manyavar to grow. Next, please. Manyavar is the undisputed category leader, which is substantiated by this chart itself. That Manyavar is the only one which has been able to scale in this industry. Not only scale, but scale in the most profitable manner. Similarly, if you look at the women's branded section where Mohe is located, you will find other branded peers, but they're not exactly competitors as they are either into saris, salwar suits, or brands which are into ultra luxury. Mohe is the only one in the mid-premium category and also known as the first national level lehenga brand. Next, please. We have not only achieved scale, but also achieved it in the most profitable manners. So all the parameters that you see here, whether it's ROCE, net profit margin, or operating margins, we stand tall in all these spheres. Next, please. Our positioning has been further strengthened by us entering into women's segment and also us entering into men's value and premium segment. Across all our products and brands, we follow the same philosophy of delivering aspirational yet value for money products. Even though pricing is different, we offset it by the experience provided. We take immense pride in saying that we have a strong and versatile product mix, and that is the only reason we're able to serve across cultural needs of India and across states, which is applicable for all our brands, which we have learned from the ecosystem of Manyavar. Coming to the strengths of each of them, Manyavar is our flagship men's brand and a leader in the space. Twamev is a unique bridge between Manyavar and the ultra luxury segment, providing garments at a very attractive price when compared to ultra luxury peers. Manthan is a unique combination of a brand with great designs and value pricing at the same time. Mohe is the first lehenga brand that we have. The variety that we have in design, colors, and fabrics is unfound with any other brand in India. It's been one of the fastest brands to reach customer revenues of 90 crores. While Manyavar took 9 years, Mohe only took 5. Mebaz is a heritage brand having a very strong presence in AP and Telangana. This has increased our market share in South India and has been an eye-opener for us, showing the potential that can be unleashed in a single city like Hyderabad. Next, please. Manyavar is very unique because of the business model. We combine an asset-light brand along with firm control over the retail experience. We deliver this by having full control from fabric procurement to designing to getting it manufactured and to replenishing it to our stores through our automated replenishment model and to have complete grip on our retail through our EBOs. We've been able to achieve this. Even though we are a fully franchisee-led brand, we have managed to run those franchisee stores as our own company store through our operations team, which consists of a national and multiple regional and area sales managers. We identify the location for our franchisees through our robust business development team, through various permutations and combinations being tried. Then through our brand pool, we ensure that the stores have walk-in from day one itself. Once the customers check in, we ensure through our auto-replenishment model that the right mix of product is available at the right quantity for the right customers. Once all of this is ensured, the most important thing is how do we sell it? So we train the entire franchisee fraternity, including their staffs and the owners, on a 52-week training model, resulting in the same warmth and great customer experience to our customers across Pan India. Thus, the combination of all of this has resulted in very happy franchisees. Next, please. These are a few pictures of our great stores. On the bottom left, you will find our newest store in Jayanagar, Bangalore, and beside it is our store in Elgin Road, Kolkata. Can we please just move through these slides? Manyavar has been built on 4 key pillars, which in turn have become very strong barriers to entry for any new entrant. First being a strong supply chain and vendor management system. We have grown with our artisans and vendors, and they truly have become part of our parivar. It is not easy for corporates to connect with such deep-rooted artisans. We have also extensively worked on organizing them through the use of different softwares that automizes cumbersome processes. And we've also instilled a great relationship throughout our 2 decades of relationship with them. Second is our pulse on consumer preferences. India is a country with diversified tastes, and through our rich data repository, we're able to design, produce, and sell these products. Third is our inventory management system. Since our EBO inception in 2008, we have an auto-replenishment module that allows us to manage inventory with minimal dead stock, regardless of no discount whatsoever in our Manyavar brand. Our proprietary Sansar technology connects all the Manyavar stores in the family, facilitating store-to-store transfers and also online orders. Last but not the least, we're able to keep an asset-light model because of our amazing franchisee partners. Our stores are always in demand regardless of the location. Next, please. Manyavar has become a synonym for celebration wear because of our strong marketing strategy. We use a mix of conversational and objective-based campaigns. Conversations help us build deeper emotional connect with users, creating brand advocacy. Objective campaigns move from dressing up the groom to targeting friends and families, and finally all wedding attendees through our Taiyar Hokar Aiye campaign, in which our brand ambassadors ask attendees to dress up in Indian wear through quirky means. Awareness is built through conversational campaigns, while consideration is created through objective-led campaigns. Finally, conversion is achieved through the strong customer experience which we provide. We have a 360-degree approach covering all offline and online mediums for our media spends. In order to further strengthen our position, we are going phygital, which is combining the digital and the physical world. We have partnered with the best of marketing and e-commerce platforms to hyper-personalize the user's journey and either convert them online or bring them to the physical world through features like book an appointment or book a video call. Thank you, and I request Rahul ji to present from here.
Thanks, Vedant. The company has a multi-channel pan-India presence with more than 90% of revenue contribution coming from exclusive brand outlets. Strategically by design, the focus on exclusive brand outlet is very high because we want to give an aristocratic experience to our customers so that when a customer comes to our store, they feel like a king or a queen. Other offline channels like MBO and LFS network increases the reach of the brand exponentially to more customers and different markets, including small cities. The company has also significantly increased its focus on e-com and has taken various tech initiatives in recent years, which is already gaining traction. As a result, strong growth has been witnessed in recent years, with growth of around 50% in FY21. During 6 months period ended September 21 also, we have already achieved more than 90% of customer revenue of entire FY21 which we achieved in that year. The company has also partnered with all major platforms like Ajio, Myntra, Amazon and others. Celebration wear is a product category with varied regional taste and preferences. We have truly built the only national brand with pan-India presence, having strong acceptance across all the regions. The retail presence have been evolved over the years and has increased from 0.5 million to 1.2 million square feet during FY16 till September 2021. The ease of digitization and convenience of shopping online has led to an omni-channel transformation in retail. The omni-channel play has been enabled by fully integrated supply chain and inventory management system. Next slide. The company has organized a largely unorganized supply chain with high quality control standards. We have a strong and experienced in-house design team headed by our Chief Product Officer who is associated with the company for around 2 decades. We have a 52-week design collection model and our design process undergoes a rare combination of art and science. The key drivers which has enabled the company to strengthen and organize the supply chain in the most efficient manner are accurate forecasting and planning to guide end-to-end supply chain, system-driven procurement and controlled manufacturing, strong and growing long-standing relationship with our vendors, and automated replenishment and inventory management. Manyavar is a tech-driven company with focus on system-driven process and automation since inception. This slide demonstrates the tech initiatives taken by us, which is way ahead of any other retailers or peers in the industry. The company has ERP system from very beginning to ensure data integrity and authenticity from day one. Inventory auto replenishment planning model was started with the very first first EBO opened in 2008 to enable system-driven replenishment and back-end supply chain management. The company has a strong and experienced management team across various business verticals. The management team has a perfect blend of homegrown veterans and experienced industry professionals. The management team has showcased very high level of commitment, loyalty, and passion over the years. It has also played a very important role and has significantly contributed to the successful and dynamic journey of Manyavar over the years. The company has demonstrated highest level of corporate governance over the years, with its focus on system, process, and controls. The company has a very strong and experienced board of directors, comprising of its key pillars, Mr. Ravi Modi and Mrs. Shilpi Modi. And Sunish is also a nominee director on behalf of Kedara Capital. We have highly experienced and qualified independent directors, like Manish is the vice chairman of Asian Paints, Tarun is ex-MD of Nike India, and Amanti is experienced director in various listed companies. The company has Big Four auditors for almost a decade. EY is our statutory auditor, and Deloitte is our internal auditor. The company has been responsibly embracing ESG by empowering artisans, employees, and community through various enablers, like providing employment to local artisans as well as embroidery workers. The company believes in inclusive growth of all stakeholders and have provided continued support to vendors and jobbers even during the tough times like COVID. The company also contributes through Manas, aiming towards promoting healthcare and education of the underprivileged people. The company has received various awards and recognitions over the years as presented in this slide. Now I would request Siddharth to present our growth strategy.
Thanks, Rahul. Namaskar, everyone. Opportunities to grow are immense for us, evident from the sheer market size itself. We have a planned multi-level growth model to ensure our robust trajectory in the future as well. We'll discuss in detail about each of these growth drivers in the subsequent slides. The first week, footprint expansion. This has been a key growth driver for us in the past and would continue to remain the same in the future as well. We have a clear blueprint and the roadmap ready to double our footprint expansion or footprint, and which the growth over the next few years. And this growth will come in 3 avenues. First, by us entering into new cities. Second, by us entering into new markets in the existing cities. And third, by us further penetrating into the existing market in the existing cities. One of the unique strategies being followed by Manyavar. Next. Internationally, currently we are present around 25,000 square feet. We have a clear blueprint ready for international markets also to take it to 50,000 square feet over the next few years. We have identified the spaces and the cities and the countries with large Indian diaspora, having great opportunities for us to grow. Next. An important growth driver for us will also be through our increased productivity, which will come from our upselling and the cross-selling initiatives across our various brands. Now, let me take a step back to make you understand the growth opportunities that we are addressing to our market. We have two target segments, first being wedding, the other being the non-wedding. Wedding can be further subdivided into three segments, first being the bride and the groom, second, their immediate family and friends, and third, the attendees and the guests. In India, irrespective of one's religion, we have approx 4 to 6 wedding events to be conducted as rituals, and one definitely needs to wear a new attire in each of them. It means that every wedding customer who walks in our store has a potential to be sold at least 3 to 5 pieces, as this is their need. And the same applies for both the bride and the groom. And this is when we have not considered yet their parents, siblings, or the close friends, who also desire to be dressed up well in their special occasions. So the scope is immense to at least cater to 25 people from each side in each marriage. Now comes the non-wedding section, which caters to festivals and celebration. India is the land of festivals, with 15 national festivals and 36 regional festivals. Given the scope both in the wedding and the non-wedding segment, we sometimes feel that even after 2 decades, we as a house of Manyavar are still a startup. And to capitalize on the scope, we give robust training to the entire sales store staff fraternity of our franchise, along with good incentives to encourage them. As a result of all these initiatives, our ABS has increased by 20% versus financial year 20. Next. Kids segment can be a significant growth lever for us going forward. Kids as a category accounts for 9% of the overall ethnic wear segment. So we at Manyavar have a renewed focus for the segment. Currently, the segment accounts just 3 to 4% of our revenue, but we are very confident to scale it up given our new strategy. The growth for this will come through us adding kids segments to more and more of flagship stores. Second, by increasing our product category offerings in this segment. And third, by having independent brand awareness campaigns to make people aware of this segment offering by the House of Manyavar. Next. Mohe will indeed be one of the most important growth driver for us, given the sheer size of the women's ethnic wear market itself and where we are currently. We are very confident of the robust growth of this brand. Why we claim ourselves the first national lehenga brand? There was a reason for it. The demand that we have today for lehengas was unseen before. The same bride who used to wear just one lehenga across her 4 to 6 wedding events now prefers to wear lehenga in 2 to 3 sets of events. The aspirational young bride today aspire to wear something from a unique and a premium boutique wear, but she cannot afford her. So we saw there is a gap in the segment. So now we are satisfying her aspiration by having a brand ambassador like Alia Bhatt. And at the price point at which we are selling our product, our ASP for lehenga is just 20,000 rupees, also meets her pocket. So we are very confident that we have just started the journey, and this Mohe can be the next Manyavar in the women's ethnic wear market. The strategy to grow is similar from our learnings of Manyavar by footprint expansion, by having independent brand awareness campaigns, by improving our merchandise mix. And the fourth and the most important point to highlight here is the launch of our concept called Manmo, which is a Jodi-based coordinated dressing concept. What we see these days is the both bride and the groom prefers to wear coordinated dressings across their wedding events, but there is not even a single brand offering the same to both of them under a single roof. So now, keeping all the wedding events in our mind, we have curated designs for each of them so that they both complement them, each other in each of these occasions. Next. The next level of growth for us will also come through our two startups, which is Twamev and Manthan. With Twamev and Manthan, now we're present in 3 layers of the value spectrum, by which we are covering approximately 90% of the wedding segment in India by value terms. The growth strategy for both again comes from the similar lines of the learnings of Manyavar. But we're coming through footprint expansion. We're having more and more Twamev stores along with the flagship stores of Manyavar, and also standalone stores for Twamev in the years to come. By improving merchandise mix, and third, by having independent brand awareness campaigns. So for Twamev, you'll start seeing the campaigns very soon. Same goes for the Manthan as well. We will be present across the reputed MBO, LFS, and SIS across India. Currently, we sell just kurtas in Manthan. We'll be increasing our product category offerings in this segment also, similar to what we have in the lines of Manyavar. And then by independent brand awareness campaigns. Next. Being a cash-rich company, growth through acquisition will always be one of the growth options for us. But as a company, we have a very disciplined approach towards acquisition, as we have shown in the past in our acquisition of Mibas, which is one and the only acquisition till date by the House of Manyavar. The objective to acquire any company for us is very clear. If the acquisition increases our market share, second, if it adds value to us and we both create synergies for each other, third, if it is in some adjacent categories in Indian wear, and fourth, being a tech-enabled company and a company which believes as tech being one of the pillars for growth for us, we are always excited to onboard a company which can further enhance our tech-enabled capabilities. Thank you. Would request Rahul to take you through our strong financial summary.
Thanks, Siddharth. The company has a very strong growth trajectory with best-in-class financial metrics as well as returns. Industry-leading high gross margins of 65% and above enables generation of strong profitability for the company. The EBITDA, PBT, and PAT percentage over revenue are around 50%, 37%, and 27%, which have consistently grown over the years. The company also has industry-leading ROC of around 50%. This slide demonstrates that Vedant Fashion is one of the fastest growing consumer brand, both in terms of revenue as well as profitability. The company has industry-leading revenue and return, which is much higher compared to any other leading consumer companies. Manyavar is a category leader, and we have chosen the best brands and market leaders in other consumer segment for comparison as a result. This slide demonstrates that company is well positioned in terms of profitability as well as return metrics. The PAT and operating margins are best in class compared to any other leading consumer companies. As we discussed in earlier slides, the company has a very strong financial return metrics, which reflects the consistent and strong growth path of the company over the years. The revenue of FY21 was significantly affected due to COVID, and hence FY20 figures are more representative from a complete financial year prospect. Although last 15 to 20 days of FY20 were also affected due to COVID. We were one of the very few companies having strong financial return metrics in FY21 and September 21 as well, despite of a COVID situation. The company has a net worth of around 860 crore as on 30th September 2021 and has an asset-light business model, which is evident from the balance sheet as well. The company is cash rich and is having cash equivalent of more than 250 crore as on 30th September 2021, even after doing buyback and dividend payout of around 500 crore in last 2 years. The company has a track record of generating significant cash driven by a healthy cash conversion ratio. Even during FY21 with COVID impact, the net cash flow from operating activity was more than 250 crore with a cash conversion ratio of around 90%. The company strongly recovered from COVID in FY21 with leading financial return metrics and healthy cash conversion ratio. During 6 months period ended September 21, the company has reported significant growth and strong profitability despite of COVID during Q1. Considering the category of our business, the demand for product is deferred instead of getting destroyed. This is clearly evident from Q2 revenue, which has significantly grown compared to FY20, which was a non-COVID period. This establishes the potential and capabilities of the business to outperform even in the most difficult economic conditions. Thank you and namaskar everyone. I would now request Bakul to start the Q&A session.
Thank you, sir. We will now open the floor for the Q&A session. We have already received some questions. While we take those questions first, we would request everyone to post their respective questions in the Q&A panel. We will try our best to ensure that all questions are answered. A gentle reminder to kindly identify your name and media house while posting the questions. The first question is from Mr. Dilip Shah from Smart Investment Ahmedabad. What is the basis of the IPO pricing? Considering the fiscal 2021 asking PE is 161 times.
So Vedant Fashion is India's largest Indian men's wedding and celebration wear category company based upon revenue and PAT as per the CRISIL report of FY20. The company has a very strong financial return matrix as we discussed during slide presentation also. The company has got very high cash conversion ratios and has an asset-light business model also. The company also has a very strong growth trajectory in future as well, considering the key growth drivers like area expansion, cross-selling and upselling initiatives to improve stores productivity. It also has a couple of emerging brands, as was explained by Vedant during presentation and Siddharth as well. Like we have Mohe, which was started in 2015. We have Manthan and Tome, which was started in 2019 and 20. So there are a lot of growth drivers which are there to ensure that the company has a significant potential of business growth in future as well. I would also request our BRMs to put some thought on the valuation aspect.
Thanks, Rahul. Maybe I can come in and others can follow. I don't think it's right to look at a company such as Manyavar on a trailing 12 months basis. There is significant growth ahead, as you've seen from the presentation and what Rahul just explained as well. Given their market leadership, they become beneficiaries first and foremost of the entire organized to organized shift. And that in itself is a huge, immense advantage. Plus, to add to that, the significant rollout and penetration that they will achieve over the next few years, we see this as an extremely attractive offering. Also, lastly, we've also gone to the best of the best, the marquee investors, and gotten feedback from them, based on which we have priced this issue, and we are extremely confident of a great listing here.
Yeah, I can just finish that point. I think as articulated earlier, I think we have seen a tremendous response from institutional investors from a process perspective. When we were in the midst of our roadshows, what we have seen is that with the pricing that we are currently out to the market with, there has been a strong indication of anchor investors, which includes sovereign wealth funds, long only FII, blue chip names, majority of the mutual funds, if not all, in the anchor book. So you will see the synopsis of that when it becomes public on the 3rd. And essentially that has given us comfort to price the transaction, where it's currently envisaged.
I would just to add one point. And FY21 may not be fully the right year to look at, given that there were disruptions due to COVID in the first quarter across India. And the way company is poised with respect to the demographic profile of India, besides the celebrations, it's also the weddings. And the entire demographic profile of India is the way where Vedant Fashions is very, very well poised to capture a lion's share of the market going forward. So one has to also look at multiple aspects and not just historically.
Yeah. And just to summarize on that, we've actually positioned Manyavar as a category leader in the sector it operates in, so the subsector it operates in, and we've actually looked at all the respective peers that are category leaders and pegged the valuation to the same.
I think clearly when we have done that comparison in terms of operating performance, financial performance, historically and currently, I think it is completely off the charts compared to many of the comparable companies which are listed in the space. So we've done all of that working, and obviously, as Viren also mentioned, that we've taken feedback from investors, and which is why we feel that it is appropriately priced at this level.
The next question is from Ruchit Purohit from Financial Express. Why is the company not issuing fresh equity and only OFS? Also, please throw some light on the cost of acquisition by the selling shareholders.
Well, the company operates on a very asset-light business model. As we've mentioned before as well, our entire supply chain is taken care by jobbers and vendors who we've grown with over the past few years. And because of our stakeholder strategy, we've grown with them. And the front end is completely run by franchisees who open our stores, and they're the ones investing in the capital expenditure of the stores. And about 73% of them have been with us for more than 3 years now, so showing their strong returns. And thus, because of these efficiencies, we've been able to build around our business model. The company does not require cash to grow. And we, as a company, believe in forward integration, where we invest in technologies of future and try to automate our processes. And Rahulji can shed some more light on the second part of the question.
Yeah. So now I think you have covered well, Vedant, in terms of explaining that company is cash rich, doesn't have any debt, and does have a healthy cash conversion ratio and strong profitability, and as an asset light model as well. In terms of cost of acquisition, this is an old company. It started. It was incorporated in 2002, so long back, and from that prospect, it was as a normal company. It was started by the promoter Mr. Ravi Modi and Mrs. Shilpi Modi, and the share capital has developed over the period as well.
The next question is, why did you choose the FOFO model versus the COCO model? And why have regional players not been able to scale up to become pan-India players like Vedant Fashions?
So taking your first question, when we started retail in 2008, we had all models, franchisee-owned, franchisee-run, company-owned, company-run, company-owned, franchisee-run. As we started to learn that India is such a diverse country with each region having its own preferences, its own demand, we thought it would be ideal for our company to have entrepreneurs at a local level. So most of our stores, actually all our stores in the parent company are now run by franchisees. And this allows us to have a store entrepreneur who is leading and driving the business at the store level and allows us to bring efficiencies at a much better level, so to say. And even in a corporate environment, running COCO stores becomes very difficult. And we thought as a company, we should focus on our strengths, which is merchandising, marketing, and technology, and let the franchisees take control of the other metrics. And this also allows us to run in a very asset-light business model. The answer to your second question would be, while there are regional players that have done great, we as a company have always focused, and because the supply chain is so fragmented, we've been able to teach our vendors and jobbers over 2 decades of experience how to operate a computer, how to open a bank account, how to fill in the GST. So the entire process with them has been amazing, of teaching them, educating them, and them growing with us. Now, even they use software such as the vendor management tool, which automizes all the cumbersome processes and allows us to get products into market a lot quicker. The second big part to this is that in India, all states are like a country when it comes to the diverse tastes and consumer preferences. Even within cities, we see that a Karol Bagh behaves very different from a South extension in terms of what the consumer demands. So because of a strong focus on technology, we've been able to identify these data points and make a completely automated replenishment model where our system understands what is selling and how well in which part of the country. It instructs our designers that follow these data points in order to scientifically come up with new designs which are inspired from our bestsellers. And then we go to market with these strategies, allowing us to have minimal dead stock and understanding India as a whole, basis data and not basis a human brain perception.
The next question is from Vishnu Bhardwaj, business editor Nav Bharat. Everyone knows Vedant is in the unique segment. Can you throw some light on the size of the market in which it works? And the corollary to this is another question which is slightly different. Our Prime Minister and his government is working very hard for the vision that in every segment, 1 out of top 5 would be an Indian brand. Can you think and work towards that in fashion brands across the world, Manyavar?
Sure. So taking to the first part of the question, the ethnic wear market size, according to the CRISIL report, is about 1.8 lakh crores. In the 1.8 lakh crores, the celebration wear industry as a whole is about 1 lakh 2,000 crores. In the men's segment, the entire celebration wear industry as a whole is about 13,000 odd crore. And the branded segment is smaller, which is about 3,000 crores. And CRISIL also estimates that the branded segment will grow at a CAGR of about 20 to 22% over the next 5 years in the men's segment, owing to 2 major factors. One, that there is a big shift from unbranded to branded. And the second, that consumers are now preferring to wear ready-made products over tailor-made because of the seamless consumer experience and go-to-market strategy. And coming to the second question, it is the company's vision to be an intrinsic part of everyone's celebration worldwide. So, with great respect for the Prime Minister, we would love to be one of those companies, but hard to comment more.
The next question is, your RHP mentions that you plan to increase the retail footprint from 1.2 million square feet to 2.2 million square feet in the next few years. Can you elaborate on this?
So we have three clear identified strategies. Siddharthji, would you like to take up this question?
Sure, Vedant. So as we discussed while you presented, so we have a clear strategy to double our footprint expansion, which will come through three avenues. One, by us entering into new cities, which have been identified by our robust RBD team on the basis of their research on the cities, of the consumption capacity there, basis on our numbers, what our MBOSIs are performing there, and a lot of other metrics that we follow as a part of our process of identifying those cities. Second, by us entering into new markets in the existing cities. So there are a lot of markets in the existing cities itself, which have great opportunities to grow, which we have identified, and we will be having our footprints there as well. And third is a unique strategy being followed by the House of Manyavar, is by us further penetrating and increasing our market share by entering into existing markets in existing cities. Let me explain this through some examples. Like, for example, we have Commercial Street in Bangalore, right? So there are wedding markets in India, maybe approximately 60 to 70 such wedding markets in India, which has a potential for a company like us, which is huge given that those 100-meter to 500-meter stretch. So for example, Commercial Street, we have 3 stores there right now. So the first we started, it did great. Then second and the third, and each are growing. It's not the stores are cannibalizing itself. So from 4 crores to now, that market itself is running around 24 crores for us. And thus there are similar such examples across the country, in Delhi, Karol Bagh, in Calcutta, Lindsay Street. So these are the 3 basic strategies through which we will double our footprint in the country.
The next question is from Dilip Davda from chittorgarh.com. The segment that you operate in is fragmented with many local players. How are you placed against them, and how do you intend to take it forward?
I don't think it's a very fair comparison. We are a fashion brand, and while regional players are doing great business and they understand regional preferences, because of us and our vision of nationalizing Indian wear, we've been able to identify what sells where in which part of the country and then place our products accordingly. And the second point would be that us being a branded player kind of separates us from the regional players in particular cities and regions. Our marketing has also greatly helped us in this avenue. So we've been able to create a very aspirational brand that consumers trust, and at the same time, it's value for money because of the pricing that we provide. And all our ads have been deeply rooted into Indian culture. And because of our media strategy, Manyavar is a well-known brand now.
The next question is from Sushri from Prameya News. Do you think this IPO will bring cheer in the market, which is now going through uncertainties? Any plans of expanding in Odisha?
So,
absolutely,
yeah, Vedant, go ahead.
Yeah, we're present in Odisha, and we have multiple stores in Bhubaneswar and even some other cities in Odisha. So definitely we'll continue growing in that state as well. Yeah, please, Rahulji.
Yeah, so of course, as BRLMs, they all explained how exciting this IPO has been so far for us, and there's a lot of demand also which we can see. So of course, we are very hopeful that it will bring a lot of cheers in the market.
And we're in the business of celebration, so we hope to bring celebration everywhere we go.
The next question is from Ankit Agarwal, Mint newspaper. What are the company's plans for international expansion?
So as we described when we are presenting, so we have currently around 25,000 square feet of retail space internationally, and we have a clear blueprint ready with identified countries and the cities with large Indian diaspora to take it to 50,000 square feet over the next few years. Our international stores are also doing phenomenally well, And we are also surprised by the performance of few stores there.
The next question is from Jaini Gordhandas, Chanakya Group of Newspapers. What is your e-commerce strategy? At present, how much sales you generate from online platforms?
So in H1 of this financial year, about 3.7% of our total revenue came from the e-commerce channels. We focus very heavily on being present across all different third-party marketplaces. And at the same time, we have a strong brand.com for Manyavar. And because we're in this wedding space of the industry, where people use our website to experience our products, especially the ones who are about to get married. So they experience it, then they use our omni-channel features such as book an appointment or book a video call to come to the store, to experience the product in real life, have a feel of the fabric, maybe get an alteration done. And yeah, so it's been working really well for us, especially the omni-channel play. And secondly, while we mentioned Manthan, which comes in the value segment, so that again brings in a great avenue for growth in the e-commerce segment. So allowing us to have very good pricing across the different marketplaces through that brand.
In line with that question is the next one from Surendra T from the morningcontext.com. What is the online to store mix you envisage in 3 years and 5 years?
While we can't really give any future predictions, what I can tell you definitely is that even if people are buying offline, in the coming few years, everything will be phygital. So the experiences will be created online and delivery or alterations in these kind of processes could be offline. So we'll definitely see a change in how companies like us kind of shift to provide better consumer experiences, which is what we're currently doing, and investing in technologies of future. So there would definitely be a shift in people experiencing more of the brand online and using digital channels.
The next question is pertaining to the fact about online revenue shares. Okay, fine. This is a question from Gitanjali Kedia, SP Tulsian Investment Advisors. Revenue share of Manyavar is still 82% of company's total revenue. What are the reasons for limited success in other brands like Mohe, Mebaz, Manthan, which have been around for over 5 years?
So we launched the brand Mohe at the end of 2015 almost. And to be honest, it took us about three years to discover what would be the nucleus of the category. Once we understood that lehenga would be the nucleus supported by saris and gowns in our brand, we started aggressively marketing it through our independent marketing initiatives. And to a surprise, with the brand really outperformed, and it was able to reach customer revenues of 90 crores in just 5 years time period, when compared to 9 years that Manyavar took to reach that revenue levels. And really, once things get normal and we're able to see a full year, we would be able to show the success of Mohe in its true light. While the other brands such as Manthan and Twamev were recently introduced in 2019 and are already performing really well. The strategy for Mebaz, of acquiring Mebaz, was basically because of 3 reasons. So you wanted to see how Manyavar could add value to the back end of a already existing retailer in a region and add more to the bottom line. The second reason to see was when we had to enter AP and Telangana aggressively, that we had 2 strategies. We could either buy a player or open our own store. So we thought of exploring this new strategy. And the third avenue was to see the true potential a city like Hyderabad holds. And I think we were able to see great results in all these 3 spheres as well.
The next question is, tell us your financial growth over the years and your performance in the first half of FY22 post-pandemic in terms of margins and return matrix.
So as it is included in the RHP, we have reported a revenue from operation of 360 crores during 6 months period. And the EBITDA has been around 176 crores. The PBT has been around 132 crores, and the PAT has been around 98-99 crores. The gross margin has been around 66%, which has been very strong and best in class. The EBITDA margin is around 49%, and the PBT is around 37%, and PAT of around 27%. So despite of a COVID situation, the Q1 was severely affected because of COVID, but still the company has been able to recover very strongly in Q2 as we discussed, and have been able to report very strong financial metrics during H1 of the current financial year.
The next question is from Dilip Dowda again. You paid dividend of 200% for FY21 so far for the reported periods of RHP. What will be your dividend policy going forward?
So the company has drafted and the board has approved a dividend distribution policy for the company, and the board will propose dividends in future as well after considering all the factors which have been mentioned in the dividend distribution policy. Historically also, as rightly mentioned, the company has paid dividend and has done buyback also in the past, because the company has been able to generate a lot of cash in the past, and it's a cash-rich company without any debt. So whatever surplus cash is there, the company has been benefiting its stakeholders in the past also, and it will continue to do in future as well.
The next question is, so last few questions, but the next one is, could you please tell us about your supply chain and inventory management? How do you utilize data analytics for capturing and analyzing consumer preferences and purchase trends, if at all?
Sure. So the company has had great emphasis on technology from day one itself. So in the first year when the company was formed, we have an ERP system showing the true vision of founder Mr. Ravi Modi in terms of technology. When we launched EBOs in 2008, we had an auto replenishment system since again day one of our first EBO store. And we've developed an algorithm over time that uses different mechanisms of artificial intelligence and machine learning to understand what type of products consumers are liking in which part of the country, and then hereby fulfill those orders. Similarly, this data can't just exist in silos. So we have two types of designing teams as well. While we work on a 52-week design collection model, the first team, which is a completely scientific design team, kind of analyzes what is selling well and how well in which part of the country, and then designs products accordingly. While the second team is a completely artistic team taking inspiration from different parts of the world to come up with new and innovative products. And these products are then analyzed to see that which part of the country would they then sell well in and accordingly ship. And then there's a third part, which is our proprietary technology called Sansar. Now, this again opens up the entire possibility of an endless aisle connecting all our stores in India, not only physical, but also to the online store. Furthermore, the concept of endless aisle we've been hearing for recent few years, but we've had this technology which was built in-house all the way from 2011, showing a true focus on technology.
Last two questions. The next question is from Sambit Saha, The Telegraph newspaper. What has been the impact of the third wave of COVID on your business?
So third wave, we have seen very minimal impact so far, because in the third wave, the stores have remained open except few lockdowns during weekends in a couple of cities. So the best part is that it has very less affected. The third wave COVID has been very less effective to all the population also, and the lockdowns have also not been very extensive. So government has allowed to open the stores either alternative days or something like. And similarly, during weekends, in some places, as I mentioned, in a couple of places, stores were shut. So till now, the impact has been very minimal compared to the second and first wave, I would say.
The last question is, can you throw some light on your advertising and marketing expenses annually?
Sure. So as efficiencies in the DNA of our company, when COVID struck, we really focused on digitalizing our advertising and moving to more digital fronts that allows us to optimize our budget. And similarly, the media prices were also falling down. So we were able to optimize our entire advertising spends quite a lot. And because of these learnings, I can definitely tell you that we would definitely not go back to the relevant levels of advertising spends that we were doing back in the days. And we will stay at more optimized levels moving forward.
Perfect. Now let me invite Mr. Santosh Verma from ICICI Securities Limited to give the vote of thanks.
Sure. I would like to thank the management for taking us through the highlights of the issue. On behalf of Vedant Fashion Limited and the BRLMs, I want to thank you all for taking the time out to listen to the company's story. As we all know, Vedant Fashions is the largest company in India in the men's Indian wedding and celebration wear segment. The Manyavar brand is a category leader in the segment with a pan-India presence. The company has established a multi-channel sales network focused on franchisee-owned EBOs. It offers a one-stop destination with a wide spectrum of product offerings for every celebratory occasion. We've been seeing a fairly strong and high level of interest in the issue from the investor community at large. We look forward to your continued support to make this a landmark offering. A quick summary of the offer before we conclude. The offer comprises an OFS of 36,364,838 equity shares of face value of 1 rupee each at a price band of 824 to 866 rupees per share, aggregating to 3,149.2 crores at the price band. The offer opens on 4th of February and closes on the 8th of February with the anchor book opening on the 3rd of February. Thank you all very much.
Thank you everyone for joining the virtual press meet of Vedant Fashions Limited for their forthcoming public issue. Please feel free to reach out to us for any further queries or email us at ipo@manyavar.com. We will do our best to revert to your queries within 48 hours. Our team will reach out to you shortly with a press release. Take care and stay safe. Thank you.
Thank you.
Thank you, everyone.
Thank you very much.
Thank you, everyone. Thank you.